Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video recap that we do here each and every night on the membership side of our blog. Now today we didn't have any opening trades, but we did have 4 really great trades that we closed out for a profit. So I want to get into those, but before I do, I actually wanted to go over and take a look at the chart of the Russell. And we could really look at the chart of the SPX or the Dow or whatever the case is, but the Russell really drives home this point well. And that point is that the market has just been on a terror, right? And I don't need to tell you that, right? You're already feeling it in your portfolio. If you've been fairly short, and like we are, we're getting shorter and shorter, then we obviously want the market to turn back around, and that would obviously help out our positions. We've been delta negative now for the better part of the last 2 weeks. So this rally that we've seen up in the market, while it does hurt, is not killing us. And I think that's the key that I wanted to drive home in this video, is that even though the market's been really, really crazy and going very, very bullish, it doesn't mean that we don't have profitable positions that we're putting on and taking off. And so I want to drive home the point that at least right now, I do think that we're going to see some sort of cyclicality come back into the market before March expiration. So we have a lot of time between now and March expiration, and it's okay to put on some bearish strategies. It's okay to be a little bit tilted to the bearish side or a little bit tilted to the bullish side when the right time calls for it. And right now with the Russell, you can see that we barely have any down days, just 1, 2, 3 down days in the better part of a month on the Russell. And that's really unheard of. I mean, statistically speaking, this is kind of a 1 in a million chance. It's not a 1 in a million exact statistics going back, but this is something that we don't see that often. The market make this many closes higher in a row. So I think you have to take heed of this and understand that people who got in down here around 1100 on the Russell are going to start taking profits up here around 1880, 1180, 1190, and 1200. It's not going to last forever, and there definitely will be people who are going to come in and take money off of the table. So having said that, we obviously have some really good trades that we're still taking off, and we continue to do this month after month. Every day we're probably taking off at least one profitable trade as we get through March expiration, and we'll continue to do that. Today we didn't have any opening trades, which is actually pretty rare for us lately. We've actually had quite a long streak here where we had a new opening trade every day, and that's okay. Sometimes there's just not enough trades to get into the market and no fills, and that's exactly what happened today. So we'll see what happens as we finalize the week here tomorrow. Now with closing trades, we actually had 4 trades today. The first one is FXI. Now we actually bought out of one of the 8 vertical put spreads that we had before, and this last order has been working now for about a week and a half to buy back the other 7 contracts that we had still left in the market. And so what we did is we bought back those vertical put spreads for around 8 cents a piece. It was the 33.32 put spread, and so we netted a nice little profit of $17 per spread. So you got times it by 7 to look at the overall position. But really the whole idea here with FXI was that it continued to move up higher, which really helped our position, and then implied volatility dropped. So you'll notice that we really exited our first trade here just a couple days ago, or a couple weeks ago, when FXI jumped. And then throughout this whole time period, it's just been a little cyclical, and now as it jumps back up higher, that allowed us then again today to exit the rest of our put spreads and take profits. The other one that I want to talk tonight about is BBY. So we had sold 3 vertical call spreads in BBY, and I believe Best Buy had earnings last night, and now it continues to trade lower after earnings. The real underlying theme here with Best Buy is that with these calls is that we bought the call spread. I just want to make sure I was looking at that right. So we actually had originally bought the 24-26 call spread, and we bought it for around $95, I believe is what we paid for it. Sold it back today for $165. That was before the market turned around on Best Buy, and it closed lower actually on the day, which is pretty incredible because it continued to move higher right at the open, and that's when we took our profits right at the open. It gapped higher, but you can see that Best Buy turned all the way back around and closed lower on the day. Obviously does not look very good for that stock, even with great earnings that it had last night after the close. The other trade today that we took off was Yahoo. This one's actually been a working order of mine for a couple weeks. Just didn't have any fills. It was the 35.34 put spread that we wanted to buy back, and we bought that back today for a 10-cent debit. That's usually what we like to do. We sold it for around 29 cents, so almost a third of width of the strikes, which is what we like to do with these put spreads. And we target to buy them back at about 50 to 75% of the max potential profit. So if we can max make on a trade, in this case 29 cents, then we'd like to buy the spread back at half of that or about 75% of that. So I think we did a good job here buying it back and taking in the vast majority of what you can make on this trade. So we took in almost 2/3 of what you could make on this trade. It was $19 per vertical that we made. So it was a very small trade, but a very good trade. It always adds to the piggy bank that we have here. Yahoo going forward obviously moved higher, and that is what allowed us to take this trade off today. You can see it was trending lower as we headed into the end of expiration, but then recently has then turned around with the general market, and that obviously lets us take this trade off at a profit. Implied volatility still is fairly low. It's just below that 50th percentile, so that has also helped us out as the stock continues to move higher. Implied volatility drops, which helps our credit spread position. And finally, Baidu, which did have earnings last night and did jump after earnings this morning. And so we had the 155-150 put spread in Baidu. We were trying to actually create an iron condor in Baidu, and thankfully we did not enter our position in Baidu, didn't get a fill on the top side, which is okay because this time it actually worked out in our favor. And Baidu jumped higher, so we bought back our huge credit spread that we had on the put side for 30 cents per spread, so made a nice big fat $81 profit per spread, which covered everything and then some for Baidu. So taking a look at the chart of Baidu, you'll see it jumped right after earnings, which was actually really good because after earnings, this obviously led to a huge crush in volatility. So you'll notice up in the top left-hand screen that volatility, which was upwards around 50, above the 50th percentile, has dropped now to the 29th percentile. So that, coupled with the fact that the stock has continued to move higher after earnings, really helps our credit spread position on the put side. So that makes it a really clean trade to take off. At this point, there's no use in fighting over another 30 cents on this very wide spread. You'll notice that the spread is almost $5 wide, so we're not going to hold it for the rest of March just to make 30 cents when we already made $81 on the trade. So take that trade off, move on to the next trade. Well, again, I hope you guys enjoy these videos. If you're watching this video on YouTube publicly, you just have to understand that you're getting this video about 7 to 10 days after it's being sent out to our members. So if you want these trade alerts live and throughout the day, as well as this video, the same day that we send out trade alerts, you've got to sign up for a membership at optionalpha.com. You can check out our 7-day free pass. There's no credit card required. Look at everything that we've got, kick the old tires, and find out if this trading system works for you. Until then, please add your comments or questions right below this video. I'll get back to all of those tonight and tomorrow before the open, and happy trading.